Discover the proven ways that made Charlie Munger a multi-billionaire with his invaluable tips and tricks for successful investing. Charlie Munger is one of the most successful investors of all time. Along with his longtime business partner, Warren Buffett, Munger built Berkshire Hathaway into a multi-billion-dollar empire over the course of several decades. Munger is known for his unconventional approach to investing, which has helped him achieve incredible success in the stock market. In this video, we'll be discussing Charlie Munger's tips and tricks while investing and how he has become a multi-billionaire using proven ways. Number 1. Invest in good businesses. Charlie Munger believes that the key to successful investing is to invest in good businesses. He believes that the best way to make money in the stock market is to find companies with strong competitive advantages, sustainable business models, and strong management teams. Munger suggests looking for companies with long-term prospects, as these are the companies that are likely to generate wealth over time. Munger advises investors to conduct thorough research on the companies they are considering investing in, including analyzing the company's financial statements, understanding their competitive landscape, and evaluating the quality of their management team. Munger also recommends investing in industries that are likely to grow over the long term, such as technology, healthcare, and consumer goods. Munger is a big proponent of long-term investing and believes that holding on to good businesses for many years is the key to generating wealth in the stock market. Number 2. Avoid overpaying for stocks. Another important lesson from Charlie Munger is to avoid overpaying for stocks. Munger believes that buying stocks at a reasonable price is essential to generating long-term returns in the stock market. Overpaying for stocks can significantly reduce an investor's potential returns and increase their risk of loss. Munger suggests that investors focus on a company's intrinsic value or its true underlying worth when evaluating a stock's price. Investors can estimate a company's intrinsic value by analyzing its financial statements, industry trends, and management team. Once the intrinsic value is estimated, investors can compare it to the stock's current price and determine if it is undervalued, overvalued, or fairly valued. Munger also advises investors to avoid short-term market speculation and instead focus on long-term value investing. By investing in undervalued stocks with long-term growth prospects, investors can increase their chance of generating strong returns over time. In conclusion, Munger's second tip emphasizes the importance of avoiding overpaying for stocks and focusing on a company's intrinsic value when making investment decisions. By practicing value investing and avoiding short-term market speculation, investors can increase their chances of generating strong returns in the stock market. Number 3. Be patient. Patience is another key trait that Charlie Munger believes is essential for successful investing. Munger is known for his ability to wait for the right opportunities to come along, and he's willing to wait many years for a good investment opportunity to present itself. Munger believes that successful investing requires discipline and the ability to wait for the right investment opportunities to arise. In his view, too many investors become impatient and make hasty investment decisions, which can lead to poor outcomes. Munger suggests that investors focus on the long-term prospects of the companies they are investing in and avoid getting caught up in short-term market trends or fluctuations. He advises investors to be patient and wait for good investment opportunities to arise, rather than trying to chase after quick profits. Munger also recommends that investors have a long-term investment horizon and avoid making frequent trades or market timing decisions. By maintaining a disciplined and patient approach, investors can increase their chances of making successful investments and generating long-term wealth in the stock market. Number 4. Focus on the big picture. Charlie Munger is a big believer in focusing on the big picture when it comes to investing. Munger believes that successful investors should have a broad understanding of the economic and social trends that are shaping the world, as well as the industries and companies that are likely to benefit from those trends. Munger advises investors to take a global perspective when making investment decisions, rather than focusing solely on their local market or individual sectors. He suggests that investors stay up to date on the latest economic and technological developments, as well as geopolitical and social trends that are likely to impact the companies they are investing in. Munger also emphasizes the importance of having a diverse investment portfolio with exposure to different sectors, industries, and geographies. By diversifying their investments, investors can reduce their risk and increase their chances of generating long-term returns. Overall, Munger's fourth tip highlights the importance of having a broad understanding of the big picture and investing in a diverse range of companies and industries. By taking a global perspective and diversifying their investments, investors can increase their chances of making successful investments and generating long-term wealth in the stock market. Number 5. Look for undervalued companies. Charlie Munger's fifth tip for successful investing is to look for undervalued companies. Munger believes that finding companies that are undervalued by the market can provide an opportunity for investors to generate strong returns over the long term. Munger suggests that investors look for companies that are trading below their intrinsic value based on factors such as their financials, industry trends, and management team. He recommends that investors conduct thorough research on potential investments and avoid relying solely on short-term market trends or news. Munger also advises investors to consider investing in companies with a strong competitive advantage, such as those with proprietary technology or unique business model. These types of companies are more likely to have a sustainable competitive advantage over the long term, which can provide a foundation for strong investment returns. Number 6. Learn from your mistakes. Charlie Munger is a big believer in learning from your mistakes. Munger believes that investing involves a significant amount of trial and error, and that the key to success is to learn from past mistakes and adjust investment strategies accordingly. Munger suggests that investors keep track of their investment decisions and regularly review their portfolio performance. By analyzing past investment decisions and their outcomes, investors can identify patterns and adjust their approach accordingly. Munger also advises investors to maintain a learning mindset and to continuously seek out new knowledge and perspectives. He recommends that investors read widely on a variety of topics, including history, economics, and business, to develop a broad understanding of the world and how it shapes investment opportunities. Overall, Munger's sixth tip emphasizes the importance of learning from past mistakes and continuously seeking out new knowledge and perspectives. By adopting a learning mindset and regularly reviewing their investment decisions, investors can improve their chances of making successful investments and generating long-term wealth in the stock market. Number 7. Be rational. Finally, Charlie Munger believes that investors should always be rational when it comes to investing. Munger believes that successful investors should approach investment decisions with a rational and objective mindset, rather than being swayed by emotions or short-term market trends. Munger advises investors to conduct thorough research and analysis before making investment decisions, and to avoid making impulsive decisions based on fear, greed, or other emotions. He also suggests that investors remain patient and disciplined in their investment approach and avoid chasing after short-term market fluctuations. Munger also emphasizes the importance of staying objective and avoiding cognitive biases when making investment decisions. He advises investors to be aware of common biases such as confirmation bias, overconfidence, and loss aversion, and to actively work to overcome these biases in their decision-making process. So, by avoiding emotional decision-making and staying disciplined in their investment approach, investors can increase their chances of making successful investments and generating long-term wealth in the stock market. Well, this is it for today's video. Charlie Munger's tips and tricks for successful investing have proven to be effective for him over the years. Investors can learn from Munger's philosophy and apply these principles to their own investment strategy. By doing so, they can increase their chances of success and achieve their financial goals over the long term. If you have any questions or comments, feel free to share them in the comments section below. Don't forget to like and subscribe to our channel for more amazing content. Thanks for watching, and I will see you in the next one.